Hello there everyone, and a very warm welcome to our webinar today. This is Pensions and the Pensions module, and it's one of our webinars that counts towards National Payroll Week webinar series and therefore towards earning your digital badge. My name's Duncan, I'm one of your presenters today, and as you can see, I am joined by my colleague Sarah, who will be co-presenting the content. Now, Sarah will be back with us later on in the webinar. Let's now take a look at what we'll cover in the webinar. So I'll start things off with a look at the pension scheme setup. So we'll have a good look at the pension scheme settings, how to configure your pay elements. We'll talk about eligibility for auto-enrollment and manually assigning a pension scheme. I'm also going to work through a few worked examples of pension calculations, linking those back to the settings that we've shown you in the pension scheme setup. I'm then going to hand over to Sarah, who's going to give you an overview of our pensions module designed to reduce the burden of automatic enrolment. And she's going to take you through a pension assessment, how to process opt-ins and opt-outs, and apply postponements. Once we've been through the pensions module stuff, she's then going to run through some further support that's available and more information about the National Payroll Week webinars. And as promised, we'll stick around at the end, give you some time to look through questions, to ask your final questions, and to make sure you've downloaded any handouts, etc. So that is what we've got lined up for you. And I'm going to get things started by talking pension scheme setup. Now, the pension scheme settings that you enter into Sage 50 Payroll will determine exactly how the pension is calculated and deducted. So, of course, it's crucial that you have the correct settings entered for your chosen scheme. Now, to get the information that you would need to check these settings, there are a number of questions that you might put to your pension provider, or you may know the answer to some of these already. And if you do have the answers to these questions, you should have everything you need to set everything up correctly. So first bit of information that's useful to know is what type of pension scheme you are using. So there is a list of pension types that you can choose, and they will automatically apply certain settings. But we also have an other option if your type of pension isn't listed in Sage Payroll, and then you could apply custom settings as required. The next question is a qualifying scheme for automatic enrolment? So does it meet the minimum requirements to be used for automatic enrolment? And does it use qualifying earnings for pensionable pay? Qualifying earnings is a reference to earnings between a lower and upper threshold, and we'll touch on this later on in the demo. If it doesn't use qualifying earnings, you'll need to know which specific pay elements should be used in pension calculations, so which payments are pensionable. You need to find out if it's a salary sacrifice scheme. That works slightly differently to a traditional pension, and it has different settings. And of course, you'll need to know what the contribution levels are. So usually these are percentages of pensionable pay, but they can also be entered as fixed amounts where required. The next question is around tax relief. So find out if the employee contributions need to be deducted before or after tax, as that will affect how the calculation is done. And it's also useful to know any references that you get from your pension provider, particularly if you'll be using our pensions module to send pension data to them. So a fair bit of information there that it's good to have the answers to, so that you can ensure that your pension scheme is set up correctly. Now, we're going to show you how to find your pension scheme settings. It's all found on the company tasks within Sage 50 Payroll. You'll see that there are 10 schemes set up by default that you can customize for your own use, but it is possible to add additional pension schemes should the need arise. And I'm going to take you through some of the key settings and some schemes that I've set up for this demo. So let's dive into that now. I'll just bring these slides down. I'll just make sure I've got my payroll up on screen. That would always help. And within payroll, I'm just going to start at my company tasks here on the left-hand side. And then from the list of tasks, I'm going to click on to pension schemes. So as you can see here, we have the 10 template pensions, and I've already kind of modified the first 3. So we're going to start by looking at my first pension scheme in the list. And this is one that uses qualifying earnings for pensionable pay. So I've kind of indicated that in the pension description. If I click onto edit, it tells me it's in use by at least one employee. So that tells me it's already assigned, and it takes me to the details of this pension scheme. So the reference is assigned automatically. The description, you can enter whatever you need to in here to help you identify which of your schemes this is. So I've just entered pension QE. And then you do have this type drop-down list. So if you know that your pension scheme is one of these types, you can choose it from the list and it will apply certain settings for you. If you don't know what type yours is, you can always choose other, and then you can set the settings however they need to be. But actually mine is a master trust pension, which means it does meet sort of enhanced standards set out for qualifying pension schemes. Now, because I chose master trust, you can see the qualifying scheme box is ticked automatically. For other types, you would just need to tick that yourself if it's a scheme that can be used for auto enrolment. And the setting underneath is that this scheme uses qualifying earnings for pensionable pay. So it's going to be looking at pretty much all taxable payments between a lower and upper threshold to work out the contributions from. Other key settings on the details include the salary sacrifice scheme box. So this is used if you have a salary sacrifice pension. With salary sacrifice, you can also calculate employer NI savings and add that to the employer contribution. And then moving on from the details, you've got your employee and your employer tab, and this is where you enter the contribution details. So I've got this one set up as a percentage contribution. It'll work out a percentage of qualifying earnings. And for the employee, we've got this set to 5%. And that's because I'm using minimum contributions where the employer is going to put in 3% and the employee puts in 5% to make a total contribution of 8% of qualifying earnings. We can also see some settings about including statutory payments in pensionable pay, but because we're using qualifying earnings, statutory payments are automatically included, so they are selected and you won't be able to change that setting. What you do need to review though is your deduct before tax setting. So find out from your pension provider whether you should be deducting before or after tax. Then you can tick or clear this box as required. Now for me, deductions are made after tax for this scheme. So for that reason, I have not ticked that box. The employer contribution is also set out as a percentage, so it's 3% of qualifying earnings, again, including all statutory pay. And on the provider tab, we can record details of the pension provider. So I've entered the provider name and the reference that I've been given. So those are the key settings when it comes to your pension scheme. Now, I do want to very briefly show you a couple of other schemes that I've set up that have slightly different settings. So this one here is a pension that is based off basic pay only. So I will need to flag my pay elements accordingly to say which ones are pensionable and which are not. And the key difference with this setup, I've chosen the other type. It is still a qualifying scheme, but for this one, I have not ticked to use qualifying earnings for pensionable pay. So other than that, I've got some percentages set up. This is a more generous scheme. So employees are putting 6% of their basic into the pension, and we've included statutory payments. And another difference here is that this one's deducted before tax. It's known as a net pay tax relief arrangement. We've got a default employer percentage of 8%, again, including the statutory payments. And I've got a provider's reference entered as well. And third one I'm going to show you is a salary sacrifice pension. So to point out the differences with this one, for this scheme, I'm not using qualifying earnings, so it is going to be based off of salary only. I have ticked the salary sacrifice scheme box, but we're not including the employer NI saving. And then when it comes to the employee contribution, it actually says sacrifice here, because technically this isn't a pension contribution. This is a salary sacrifice, which will then be added to the employer contribution in pension terms. And then this is the employer's contribution that they make themselves, which is the 3% of their basic pay. So just some variations on those key pension settings, and you'll see how they affect the calculations a little bit later on. So that is where you go to review and amend any pension scheme settings. And again, on this slide here, I have highlighted those key settings that can affect the pension contributions. So using qualifying earnings for pensionable pay, whether it's salary sacrifice, what the contribution levels are, and the tax relief, so whether deducted before or after tax. And that kind of moves us quite nicely on to a bit more information about tax relief. So if you're not using a salary sacrifice scheme, the employee still gets tax relief on their contribution, but the way that they get this depends on which arrangement is being used by that scheme, and it could be one of two. Now, if your scheme deducts before tax, that's known as a net pay arrangement, and with this, the employee's contribution is calculated from their full pensionable earnings, for example, 5% of pensionable pay, and that is then deducted from that employee before tax is calculated on the rest of their pay. So that's how they get the tax relief with that type of pension scheme. If the scheme uses a relief at source arrangement, that is when the contribution is deducted after tax. Now, the way that it's calculated is it still works out the percentage of the pensionable pay, but it then automatically reduces that by the basic rate of tax, which is currently 20%, and then deducts that from the employee after tax. So if you've entered a 5% contribution, in effect, 4% of the pensionable pay will be deducted, and the tax relief will be claimed back by the pension provider from HMRC. You can read a little bit more about tax relief on the link that I've provided on the slide. Other thing you need to consider with settings are how your pay elements have been configured. So you can edit each payment and you can flag whether it is pensionable pay or whether it should be included in qualifying earnings. And these settings will then control which of your payments are included in pension calculations. So some examples on the slide, we've got a fully pensionable payment for basic pay. So it's included in qualifying earnings. And for those schemes that don't use qualifying earnings, we've also got it marked as pensionable and included in salary sacrifice pensions. So that's the checkbox on the left. Whereas my expenses payment on the right-hand side, so it's a non-taxable payment, has not been set up as pensionable, so it's not counting towards qualifying earnings, and it wouldn't be used in any pension calculations. So if you're wondering if a pension's not looking quite right, you may need to review your pay element settings to make sure they are included accordingly. A bit more info on qualifying earnings. So the definition of qualifying earnings is any payment that includes salary, wages, commission, bonuses, and overtime, plus all types of statutory payment for sickness and parental payments. And it's usually a reference between earnings from the lower threshold to the upper threshold, as shown in the table just there. So when it comes to calculating contributions for schemes that use qualifying earnings, it's going to include pretty much all types of pay, but it's only going to work it out on the earnings between, say, £520 monthly and 4189. So those being the monthly lower and upper threshold. So if you do have that box ticked, that is how the calculation will work. So I will show you the pay element settings just briefly, but then I also want to show you how you assign the scheme to your employees. Now, with the introduction of auto-enrolment, which was started back in 2012, all UK employers now have a duty to enrol certain staff into a pension scheme. So if you identify an employee that meets the criteria, either when they join you or when they hit eligibility, you are going to need to make sure they go into a pension scheme. Now, as you'll see in Sarah's demo later on, our pensions module is pretty much designed to do most of that for you. But if you don't have our pensions module, you still can do your assessments manually. And this is the criteria that makes an employee eligible to be auto-enrolled. So first of all, it's linked to their age. It must be between 22 and state pension age to be automatically enrolled. If you're older or younger than those ages, you fall outside of the eligible category. And the wage, which is based on an annual earnings trigger of £10,000, but it will always look at the monthly or weekly equivalent depending on your pay frequency. So if you're 22 to state pension age, earning above £10,000 a year, that is when you get auto-enrolled. If you earn below that trigger, and you fall into a non-eligible or entitled worker category, you still have the right to opt in or join the pension scheme. So those employees can ask you to be put into the scheme, which you would then do, but you don't have to put them in automatically. And for entitled workers, you don't even have to contribute if you don't want to. So once you know who needs to go into the pension scheme, you would either run a pension assessment, which will put them in automatically. So that'll do the assessment for you. Or you determine who is eligible, and then they need to be enrolled into the pension scheme unless they've opted out or ceased membership. And you can get a reminder of the various thresholds, the earnings triggers, and the age assessment from your legislation settings. So let's have a look at assigning the pension scheme. We're going to do it manually, but you'll see the other way to do it when you see Sarah's demo on the pensions module. So I'll just bring these slides down for now. First of all, a quick look at the legislation settings. So if I'm in company and then legislation, you see there is an auto enrollment tab. So this is where you can check the earnings trigger for the different pay frequencies. And then a reminder of the age criteria, it's 22 to state pension age. Now, I know that this period, I have an employee that has just become eligible. So what I will need to do, because I don't use the pensions module, is I would need to assign the scheme manually. So this is done via the employee record. I would go onto the pensions tab here at the top. I would then click onto manage schemes. And then I've got the add option just at the bottom. So what I can do is I can choose the scheme that this employee is going to go into. So I'm going to put them into my main scheme that uses qualifying earnings for pensionable pay. We can set their joined scheme date, so the date they became eligible. And the active membership date is recording when you've sent the enrolment details to your pension provider. So maybe I typically do that at the end of the month. So that will be when active membership's achieved. Note that it is possible to amend the contribution percentages on an individual basis, or if required, set them to fixed amounts. It pulls through the default from the pension scheme, but they can be changed here. And if I click OK, that pension is now assigned, and I can go ahead and save that record. So they're now set up with a pension scheme, and if I set my next monthly pay date and go in at the enter payment screen, you can see the employee's salary, and here on the summary tab is where I can see the pension being deducted, and from the employer's option, we've got the employer's pension contribution. And I'm going to go through some worked examples on how they're calculated in the next section of the webinar. Okay, so we've seen there how to assign a scheme manually. Remember, if you use the pensions module, you don't do it this way. You let the pension assessment assign it for you. And a quick tip, if you did need to assign it to multiple employees, maybe you're setting up a payroll for the first time, you can also assign the pension using global changes. Now, before we go over to Sarah for the pensions module demo, I do want to just run through just a few pension calculations. And remember, all of these figures are in the slides. So if you want to look back at this with a bit more time yourself, do remember to download the handout. I've got 3 examples using the pension schemes that I used earlier. I showed you in the demo. And my first example is a pension calculation for a scheme that uses basic pay only as the pensionable pay. So we've set that in the pay element settings. We've marked that one as pensionable, other payments are not. The employee contribution is 6% and the employer is 8%. And the tax relief for this scheme is that it's deducted before tax. So it's a net pay arrangement. So in this example, the employee's total gross pay is £4,000 in the month, but that is made up of £3,500 basic plus £500 bonus. So here's how the pension calculation works. We establish the pensionable pay, which in this case is just the basic. The employee's contribution is 6% of that amount, and the full contribution is deducted before tax, so that would be £210. And the employer contribution in this example is the pensionable pay times 8%, and that is a £280 deduction. And I can show you that exact scenario if I bring payroll up. So employee number 1 is in this pension scheme. I go into enter payments. There's the basic pay, it's the salary. And then here on the summary tab, got £210, and the employer's is 280. So the settings in my pension scheme have determined how that calculation works. Second example for you. This is my scheme that uses qualifying earnings, and the contributions are 5% for employee, 3% for employer. This scheme is deducted after tax, so it's relief at source, which means the contribution will be reduced by 20%. Those are my auto enrolment bands, because I need to look at earnings between the lower and upper threshold, and the gross pay in this example is £2,500, and all of that is basic pay. So for a monthly paid employee, to establish the pensionable pay, I'm going to take that basic and deduct the lower threshold. So we're already above the upper threshold. We take the lower threshold off, and that leaves the pensionable pay at £1,980. Employees' contribution is 5% of that amount, which is £99. But because of the tax relief arrangement, we need to further reduce that by 20% or multiply it by 80% to give us the employee contribution of £79.20. The employer contribution is your £59.40, and that's simply 3% of the pensionable pay. And last example of a calculation for you, and remember, you can download these slides if you want to go through them a little slower than I have, is a pension calculation for a salary sacrifice scheme. So this was my scheme where basic pay is pensionable. The employee sacrifice is 5% of their basic, and the employer is going to contribute 3%. And the employee is earning £2,750 basic in their monthly pay. So that is the amount that is pensionable. It's all of basic in this example. The salary sacrifice amount is 5% of that. It's £137.50. But remember, with a salary sacrifice scheme, that becomes part of the employer contribution. So the way that the employer contribution breaks down is that it's 3% of the pensionable pay, £82.50, plus the amount sacrificed by the employee, which gives us a total pension contribution by the employer of 220. And it looks a bit different on the payslip as well. So there's just an image of the salary sacrifice amount, which is a negative value in with the payments. And then you see the employer pension is the only pension contribution, but that includes the salary sacrifice amount. And if you did use a setting to add the employer NI saving, there's a bit of info there on how that would be calculated as well. So useful to have a bit of that knowledge as reference in case you get any pension queries. But what I would like to do now is to hand you over to Sarah, who's going to run us through a demo of the pensions module. So it's over to you, Sarah.
Thanks so much for that, Duncan. So what we'll do now is we'll dive into the Sage 50 Payroll Pensions module. So you might not be 100% sure if you actually are subscribed to the pensions module, but don't worry, there's a really easy way for you to check. So if you click on pension assessment, that'll be located down the left-hand side of your tasks if you have the payroll option selected. If it prompts you to take a backup at this point, that means your license does include the pensions module. But if you get that second pop-up over on the right-hand side, then you don't have the pensions module, so it wouldn't be included. It will give you a prompt to subscribe. So I just want to run through what processing with the pensions module will look like. So you do have a couple of pre-update and post-update tasks included. So you have your import pension updates. That would be if you want to use that option to import a CSV file from the provider. That is only currently compatible with Nest and the People's Pension. So it's going to give you updates like opt-outs, things like that. You then have the pension assessment. So that is the main thing that we're going to look at in the webinar today. So when you run the pension assessment, it's going to automatically assess your workforce and enrol anyone who is eligible based on things like the age and the wage, or if they're a non-UK worker. You then have some pension data. So you can use the pension module to produce some pension data files to upload to the pension provider, or you can send it directly over if you use any providers like Nest, the People's Pension, or Smart Pensions. Then in the post update, you have review pension payments. So you can use that to review the pension payments if you have multiple schemes and multiple providers. You can search for a date range as well. Then last, you have the send pension correspondence. So that is going to inform you which correspondence each employee requires. And if you can track it, you can then track what letters you've actually sent out, if they've been sent out by yourself or the provider. And you can view a bit of history and a log of what letters have been produced and sent as well. So that's just a bit of a whistle-stop tour of what features you get with the pensions module. I know we're just kind of touching the surface today. What I want to look at in a bit more detail today, though, is the pension assessment. So just a little bit of a screenshot, but we'll look at this closer in the demo. So your pension assessment is there for you to identify eligible staff, and the pension assessment will also assign them into your pension scheme. You can process opt-ins, opt-outs and refunds through the pension assessment. And you can also process postponements as well. So your business might postpone new starters for the 3 months to give them that time to decide if they want to opt in or not. Or you might use the postpone option if you've got some employees that have had a bit of a pay spike. So maybe they're not normally eligible, but they've had a bonus this time round, or they've worked loads of overtime. And you can use that option for that as well. Just a little tip, and again, we'll look at this closer in the demo, is when there is a change of status, so when an employee's worker type changes, or if you've got a new starter, it's going to have a little flag icon just so you can identify those employees and look at them in a bit closer detail. What we'll do now is we'll jump into 50 Payroll to have a bit of a closer look at that pension assessment, and we'll process and look at some opt-ins, opt-outs and postponements as well. So I've got my payroll. I'm going to double check my processing date. Make sure that's all set. I've already entered my payments. It's now time for me to do my pension assessment. So you can see I've actually got a new employee this time round. If I go into my pension assessment window, see it's prompting me to take a backup. Take one at this point, but I already have one, so I'm just going to say no to that. And you can see here that will then bring me to my pension assessment screen. So you can see I've got a few different flags down the left-hand side. So I have one against employee number 7. And if you hover over the flag, it will give you more information on what has actually changed this period. So you can see that the worker category for this person has changed this period. So they've changed to an eligible job holder and they've been automatically enrolled. And it looks like they're eligible due to a pay spike. We can see it will give you the type of job holder, so it will give you the status as auto-enrolled. And if you hover over that little spyglass, it will also give you some more information. You can see the qualifying earnings has tipped them over and triggered that auto-enrolment. And their auto-enrolment date is set at the 6th of September. Now, they are currently within their opt-out period, so they could opt out or might want to postpone them. And we'll give you a breakdown of the different contributions as well and a total. Now, we also have employee 11. So they've actually had a birthday this time round. They've turned 22 and that has triggered the automatic enrolment. So it's made them an eligible job holder. We go along and have a little look at the status. See, they're definitely earning enough. It's a birthday that's triggered that auto-enrolment and that category change. You have multiple pension schemes, it does have a column for scheme as well. So if you do work with multiple auto-enrolment schemes, then you will be able to see which one they're going into. And then finally, we have employee 15, which, if you remember, is our new starter. You can see that it's flagged that they're a new starter, they're eligible, and they're automatically enrolled this period. Take a little look at status and see that they're earning enough, they're old enough. It's just that they're a new starter and it's their first time going into the scheme. So I'm going to process some opt-outs and postponements and maybe an opt-in as well. Now, my employee 14 was a new starter last month, but they've actually told me that they want to opt out. So I've received an opt-out notice from the pension provider to opt this employee out. What I'm going to do, I'm going to select my employee number 14. I'm going to go to my opt-out leave button up at the top. To pop in the opt-out date. That was received on the 3rd. And because they've opted out within the time frame, they need a refund of the first month contribution. I'm just going to tick that box so the pensions module refunds that automatically for me on the pay slip. If I go ahead and opt out, see that has been successfully applied. And what you'll notice is that it has changed the status and it's also given them the refund on there as well. Now I postpone my new starters. I'm going to go to employee 15 and use my tick boxes to highlight them. And I'm going to go up at the top just to postpone. Now I want to postpone them for the full 3 months. So I'm going to use my calendar. So that'll tell me exactly where I can go up until. So I'm going to postpone them to the 6th of December, where they'll be assessed again. And if they're eligible, they'll then be auto-enrolled at that point. Of course, if they do want to decide that they want to go in before then they can always request to opt in before that postponement period is over. Now we have a non-eligible employee on the payroll, employee number 6. Now they could always request to opt in. You can see if I look at the status, they're non-eligible because they're 74, so they have left it a little bit late, but they can always opt in if they want to. Again, that would be done through the buttons up at the top. So you would select the employee if they're non-eligible, or it might be that they've opted out and they've changed their mind. I'm just going to use employee 6 in this example. So if we opt them in, we receive the request on the 3rd, and it will, if you do have multiple auto-enrolment pension schemes, it will ask what pension scheme you want to opt in at this point. You can attach the evidence here if you need to. Just opt in. Now you can see, although we've opted them in, it hasn't actually given them a contribution this time round. Reason for that is you can see the enrolment date has went into the next pay reference period. So if you are opting someone in, the contributions will kick in from the next pay reference period. So you can see here that's the 6th of October. So next time round, next time I process a payroll, they'll be paying contributions then. So that's a little bit on the pension assessment. You can also print off this screen if you want to keep it for your records. It will give you a total of the employees that are on there and the payment as well. What we'll do is we'll come out of the assessment. Now I just want to have a little look. Obviously we've opted out employee number 14. Just want to give you a bit of a preview of how that would look on the payslip when opting out through the pension assessment. So you can see here, it's actually put the refund on as a negative amount on the payslip there of that first month contribution. Now, when you are working with the pensions module, rather than doing your pensions manually, you can see that we go into the employee record, longer pensions, it will give us a breakdown of our change of status on here as well. So you can see now we've actioned that in the assessment, that's filtered through to the record, and this person's now got a status of opt-out. Now, if I processed and updated my payroll, at this point I would be going to my SEM pension data, and I could send it directly to my provider or produce a report to upload. We then do have SEM pension correspondence as well. Just have a little quick look in there so you can see. Here we've got a few letters to be sent, some general notices, postponement letters, and you can choose if you send these yourself from payroll, or if the provider sends them out, you can always select provider and it will keep a history of those in here as well. So that's it for the pensions module. I know we are just scratching the surface today, really, of what is contained in that, but we do have a lot of extra really good webinars that'll go into that into a lot more detail. So I just want to run through a bit of a recap. So your 3 main steps of your pensions module, it's going to be your pension assessment. That's what we've looked at in great detail today. So we're going to identify eligible staff. It's going to assign them a pension scheme. Here is where you're going to process all of your opt-ins, your opt-outs and your refunds. You can postpone any new starters or any employees with a pay spike in here as well. Then got your send pension data. So you can submit pension data directly to any supported providers. So that's Nest, the People's Pension or Smart. Or you can run pension reports, which we have a whole load of on the Help Centre as well, or any SEM pension data. We've then got your SEM pension correspondence, which we've had a quick look at. So you can print or email any pension letters from Sage 50 Payroll. You can produce your general notices, any postponement letters or re-enrolment letters, and it keeps a record of any letters that you've sent. So that's all we've got time for today on the pensions module and pension schemes. So just before we wrap up, I do want to run through some further support. We do have our webinars for National Payroll Week. So we're on to session 4 out of 5 today, and we have the quiz tomorrow. So if you haven't already, make sure to get signed up so you can test your knowledge. Remember, you do need to attend 3 sessions plus the quiz to get your digital badge. These are going to be sent out by the end of the month. Don't worry if you're a bit late this time round. We will be repeating these sessions next week. So get signed up when you can. You can go to sage.co.uk/webinars, or if you download the handouts, the link will be on there. And remember, if you do want to look at the pensions in a bit more detail, we do have some recorded webinars on that. The Help Centre is a great resource, so you can access that by clicking the help icon in Sage 50 Payroll, or you can access it by going to sage.co.uk/help and just clicking on the option for Sage 50 Payroll. You can get your technical support guides here, you can get our recorded webinars on there, and information on how to get in touch with the team if you need to. Also want to shout out Sage Uni. It's a really great resource. You can do anything from bite-sized learning to full certifications on there, and you can do it all at your own pace. If you go to sageu.com, it's totally free to set up an account and explore the different resources that we have on there. Hi again, everyone. Really hope you found today's session useful. We're going to be closing the session down in the next minute or so. As you exit, you'll see a short survey. Please do take a moment to fill it out. We really do love to hear what you thought, what worked well, what could be improved, so we can keep making these sessions even better for you. You'll also receive a follow-up email later today. It's going to have a link to the webinar recording on there and information on how to register for any future sessions. Thanks again from me and Duncan. Bye for now.